Hello, and welcome to Chapter 3 of Accounting 205. Alright, this first video for Chapter 3 is going to discuss Schedule C. Alright, and our Schedule C section goes from page 3.2 to page 3.7, and then there's a section, or there's a picture of Schedule C on page 3.9 in your book, so you might want to pause this right now. And as we go over that page in your book. Okay, first of all, Schedule C is a form that is used for a sole proprietor. Now, a sole proprietor is a one-person owner, okay? They are not in partnership with anybody else, all right? And they are not incorporated, all right? Now, they could be a limited liability company. All right, a limited liability company is a legal entity, not a tax entity. So an LLC could file as a sole proprietor, could file as a partnership, or could file as a corporation. Okay, just one. It depends upon how many people there are. Of course, if there's more than one person, then an LLC can't file as a sole proprietorship. Okay, so you can be an LLC and still file Schedule C as a sole proprietor. Okay, you can't have more than one person, and you can't be incorporated. Okay, if you look at Schedule C, all right, you notice that in Part 2 of Schedule C, they have the section for the expenses on lines 8, okay, through 27A. All right, and this is where you would file the expenses, all right, for your client. And again, I always treat this as if you are going into business and doing taxes on a for-profit basis. So this is why I always say your client. All right, if you look at page 3.2, there is a section there that talks about deductibility of expenses. All right, and again, a lot of it is self-explanatory, but we can go ahead and review it anyways. Okay, the first bullet says that the expenses have to be ordinary and necessary. Okay, ordinary and necessary. All right, so scheduling a flight to Paris, France to try to pick up tax clients is not an ordinary thing that a tax accountant would do. Okay, scheduling a flight to Las Vegas to attend a convention there that involves tax is totally ordinary. Okay, necessary, again, it depends. As a licensed CPA in Indiana, I have to have 120 continuing professional education credits every 3 years with a minimum of 20 per year. So I can earn these credits in a lot of different ways. I could attend a convention in Vegas and have a really good time, or I could just study at home and be a little cheaper, but isn't quite as fun. Okay, the IRS is not going to disallow a trip to Vegas for me to get CPE credits. All right, is it technically necessary to go there? No. But is it ordinary for people to fly to Las Vegas to credential themselves in their occupation? All the time. Okay, that's why Las Vegas holds so many conventions. Okay, there has to be a legitimate business purpose. That's the second bullet on page 3.2. Okay, all right. I've had people who say, can I deduct my trip? And I tell them, if you can, if the primary reason is business. Okay, there's a lot of conventions and seminars that are also held right around Orlando, where Disney is and Universal Studios and all those entertainment places are. Okay, you could argue successfully with IRS that you wouldn't have gone there unless they had the seminar. All right, now the idea there is that you legitimately go to these things, and then you have you go to Disney World or any of those other places in your off time. Okay, it has to be reasonable. It has to be reasonable, okay? You know, you're not going to pay an extraordinary amount of money for something that you could have paid a lot less for. All right, you know, that again, at the same time, also, you know, people are like, well, I can deduct this on my tax return, and I tell them, well, that's true. You know, let's say you're in the 25% tax bracket. Okay, that's true. All right, if you spend $100, you'll get $25 back, but that means you're still going to be out $75. So most people realize that and go, you know, we'll be conservative and save the money. All right, so that would fall into the reasonableness area. Okay, on page 3.3, okay, they talk about, you know, form Schedule C easy. Now there are some forms that do have an easy form attached to it, like the 1040. All right, again, my advice to you is anytime you get somebody in who is a sole proprietor and you need to file a Schedule C, then file a Schedule C. Don't file the easy. All right, because again, that's more forms that you have to worry about, and sometimes the simpler forms can actually sometimes be a little harder. So, you know, limit the amount of forms that you actually really need to view. So if you want to file a Schedule CEZ, the requirements for filing the CEZ is on page 3.3. All right, but I would recommend that you just simply file a Schedule C. All right. Now, in the next video, I'm going to talk to you about inventories. All right. Now, inventories, if you go to page 310, all right, you'll notice that the inventories are reported in Part 3 in the section called Cost of Goods Sold. All right. If you have taken Accounting 101, then you know that the formula for cost of goods sold is basically your beginning inventory plus your purchases. All right, that equals your goods available for sale. All right, subtract your ending inventory. All right, and that gives you your cost of goods sold. All right, you also learn that you generally, you know, in financial accounting, we talk about using FIFO and LIFO. All right. Generally, what you would do on a Schedule C is that you would use either cost or lower of cost or market. All right, and 99 times out of 100 people will X the cost box on line 33 in Part 3 on page on the second page of the Schedule C, which is page 310 in your book. Okay, so we'll talk about inventories here in a few minutes. The other items that you would see, all right, as far as the expenses go, they're in Part 2. Again, most of it is fairly self-explanatory, all right. I will come back as we go through the rest of Chapter 3. I will allude back to certain line items on Schedule C and what would go on those line items. One of the items that I do want to mention right off the bat is on line 26, they talk about wages. All right, these are the wages of your employees, not of yourself. A sole proprietor can never issue themselves a W-2 form. Never. Okay, all right. Sole proprietors would just take a distribution from their bank account. All right, they're not technically taxed on it because they're taking a distribution out of their net profit, which is on line 31. All right, a sole proprietor is taxed on their total income, whether they took a distribution or not. All right, so again, a sole proprietor cannot issue themselves a W-2. They can hire their spouse, they can hire anybody else and give them a W-2, but they cannot issue themselves Form W-2.